My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. Of course, I am Gareth Soloway, Chief Market Strategist here. Now, in today's game plan, we're going to be looking at key trading levels, but we first have to start talking about the tariffs that were implemented over the weekend. So remember, last week, the Supreme Court basically struck down the initial tariffs that the president put on a lot of these countries. But then over the weekend, the president put a 15% blanket tariff across all nations. Now, the issue here and why the stock market is trading down today is the uncertainty. So you had deals with various allies where rates were less than 15%. We had trade deals left and right? And now what we're seeing is this is the only way the president can impose it is by doing a blanket tariff. So then you have other countries that are now saying, wait a minute, we struck a deal for 10% tariff, but now it's a blanket 15%, even though we had a deal with you, the United States. And so these are causing issues here. And the market, again, it's the uncertainty. Markets do not like the unknown. Is it going to escalate? What's going to happen? How about these refunds potentially? Is there going to be a refund for all of the revenue that was accumulated that needs to go back to either the U.S. public for the higher prices that we paid or to these companies that ended up paying the tariffs? Lots of uncertainty. Bottom line is the stock market this morning is trading down, but off of its technical lows. Let's take a look at the S&P 500. And what we can see here very clearly is that last night, the futures opened at 6 p.m. This was Friday, by the way. So again, we had that inflation data, by the way, that was much hotter than expected across the board. And I'd warned about that. If you remember, when we got the CPI about a week earlier, I said, guys, there's some data missing here. This is not a complete picture. And remember, rent and housing costs are 30% of the CPI data. It's not the greatest indicator, all right, of inflation. The PCE data is favored by the Federal Reserve for a reason. It's a much broader view of inflation. And sure enough, inflation per the PCE data is moving up. So that was already a negative on Friday, but then the Supreme Court striking down the tariffs was a positive. Could inflation come down because the tariffs are no longer intact? Well, guess what? Today we're seeing 15% blanket tariffs. So that inflation is not really going to come down if the tariffs are still in place to some extent. And so what we're seeing is in the overnight, we had a pretty sharp drop in the S&P futures. We have rallied back. Buy the dippers are coming back in a little bit here this morning, but we're still, again, setting up from where we closed on Friday to be opening decently lower across the board, all right? Now, if we flip to the S&P daily chart, the S&P daily chart itself, there's really, again, no change from what I've talked about, okay? You guys know that ever since we were at the upper range of that parallel, I was warning and saying, guys, the upside is limited based purely on technical analysis here. All right. And remember, verified investing is all about charts and no BS. Like, what are the charts saying? Because that's honestly the purest form of information we have. You go to social media, you get all this ridiculous hype. People are telling you that, Bitcoin into year end of 2025 was going to 250,000. Obviously didn't happen. We heard that silver was already going to be at $250 an ounce. That didn't happen, right? So there's all this hype out there, but the charts are so pure. They have no agenda. They have no bias. It is what it is. And so that's why we use the charts, because it allows us to be the casino versus the gambler. All right. And that's really, again, putting odds in our favor. So when we were up here, right, we have this bigger parallel on the daily chart of the S&P. This is where, again, even going back to October, I kind of said, guys, markets are tapped out here. Now, listen, we haven't really fallen sharply since then. If you look at that, we're virtually at the same levels we were since October currently. But the market, again, for me, this is distribution. Retail continues to generally buy in, thinking the markets will never go down. Why haven't the markets gone higher? Number one, the technicals. Number two, institutional distribution, aka selling into the retail buyer, keeping the narratives bullish. The institutions, remember, they want to keep the narratives bullish, because if they don't keep the narratives like the market will never go down narrative, then retail won't be buying in and they can't offload their their shares, right? So you have to look at it and understand that aspect. But ultimately, we have some issues that are concerning. Number one, upside's limited because of the parallel. Number two, we have this upsloping trend line that has now broken. We saw that break here. We hit it here, here, and here. Then we broke, retraced, and now we're chopping. And we're still keeping an eye on the head and shoulder pattern that I pointed out last week. You have your shoulder here, you have your head here, and you have your secondary shoulder there. Now, the neckline has not broken yet. Here's the neckline. This has to break. But if this were to break this week, you then have a downside target, which would be down in this range on the S&P, just below 6,600. That would be your next stopping point for technical support. All right, so I'll continue to keep you guys updated on that. Now, remember, yes, upside is limited. We've broken the white trend line that I put in here, right? This one, or this yellow, this secondary yellow trend line. I like to kind of keep my trend lines slightly different color. There we go. So this one has broken, but the head and shoulders neckline right here has not. That's the next trigger for the next leg down in the S&P 500. Okay, so if we flip over to the NASDAQ, much the same. We have the same upsloping trend line. We broke. The NASDAQ, obviously, percentage-wise, is off its all-time highs a little bit more. It never made a new all-time high from the October here. It kind of double-topped right here versus the S&P did make a new all-time high, even though it stayed underneath its parallel. But ultimately, that's because, again, we've seen the AI fear trade come in, which is, again, a lot of these software stocks. We saw CrowdStrike. We'll look at that chart in just a little bit. But CrowdStrike got crushed on Friday. The fear that AI is essentially going to put out of business a lot of these software players as it becomes more advanced. All right. Now, again, we're still seeing NVIDIA hold up relatively well, but there is issues there where if we break a key trend line, NVIDIA could be due for a free fall as well. All right. Let's take a look at the dollar. The dollar today is fractionally lower, not much going on this. I still think in general we have a little bit of a bearish consolidation kind of flag pattern here on the US dollar from this move down. So this is all inside bar chop. If we break this level, the dollar then starts its descent back to this recent low. But overall, really, again, over the last couple of weeks from this big fall on the dollar has somewhat stabilized, right? But again, the key here is the forecast in the near term for the dollar, if it breaks this trend line, is a revisit of this lows. Then we have to see if that low ends up holding. The 10-year yield is doing basically the same thing, but it's honestly even more bearish, right? We have the down move here. This bounce has been a very, very weak bounce. What's interesting, and I pointed out this last week, is if you look at how the 10-year yield's behaving, when the 10-year yield has a green candle, the markets tend to go up, versus if you looked 6 months ago, up yields meant the markets were going down. So if you look at the yield today, it's red. What's the S&P futures? Are red as well. And the idea here is that this 15% blanket tariff, if it holds, number one, it brings in more uncertainty, but if it holds, it weakens the global economy and the U.S. domestic economy because of additional tariffs on countries that we had deals with for lower tariffs than 15%, and it ultimately could weaken the U.S. economy, which is already it's already a concern to investors because of some of the latest jobs data and some of the other economic data. And so, again, a weaker U.S. economy means lower yields overall. All right, let's go to some movers and shakers today. Number one, we have this stock here. This is Novo Nordisk. Novo Nordisk is getting crushed by about 15% pre-market. They basically came out with a study on their latest new weight loss drug, and it underperformed. It performed less than even Eli Lilly's weight loss drug. And so that stock is dropping today because of that. But in massive sell-offs, what do? We say, okay, well, where are the technicals telling us that there could be a bounceable, tradable level? And if we go to the charts here and we flip over to the daily chart, in fact, I'm going to go to the weekly chart. There's this major technical support down here. Look at this, guys. So here we are, and you can see we're right at $40 on Novo Nordisk right now. So we're just above it by a few dollars. This, to me, is a very good swing tradable level, and I likely will take it myself if it gets down to 38 to 37. The reason is, if we look at Novo Nordisk, it was just kind of going along. It was floating up a little bit, and then you could see right in here, okay, Here we kind of went up, rejected, went up, rejected, went up, rejected, and then we broke out. And this breakout zone right here, okay, this was the beginning of the bigger bull move that was basically the weight loss drug hype, right? All the excitement over their weight loss drug. And so the cool thing about this is not only do you have the pivot highs right here, which should act as support, but this would be essentially a 100% unwind of the weight loss drug. And again, the excitement over it. So at this point, we should see essentially that weight loss premium fully pulled out of the stock. And it does get me interested in a buyable swing trade. Now, again, am I going to play this for a move back to all-time highs? Heck no. I'll probably look for a 10, 15% bounce and say thank you very much. That's the perfect swing trade zone for me, where you look at these levels and you say, okay, as a swing trade, we get a nice retrace bounce. And again, short covering whatever it may be there to trigger that upside. But I love finding these levels, folks. And listen, could the level fail? Sure. That's part of trading and investing, is that any level can fail, but the probability is based on the charts is it should get some sort of bounce here. And that's really what I play, right? I want to be the casino. Probability in my favor. Okay, next up, let's take a look at CrowdStrike. CrowdStrike is down again today. Not big right now, but I am going to keep an eye on this for the trading day because, number one, just going back, I remember pointing this trend line out. In fact, we traded this in smart money stocks and ETFs on the short side, but look at how this predicted the top on CrowdStrike going back to November. Very cool, right? High pivot to high pivot, boom, and there's your fall. So that's very cool right there. Number two here, all right, is, okay, so if this falls, as a day trade, we might be able to get a trade around 377, this little pivot low, 377 to 375. But I'm going to be monitoring this level. There's a gap right down here, and see all this sideways chop right in this vicinity here. If we put a trend line through, this is right around 370, in fact. But you can see high pivot, hits here, breaks out, then retraces up here, hits again, bounces, then goes below. But you can see a lot of chop, and there's a gap fill right here. And you can see the little gap. Now, it's not a big gap, so it's not a significant factor, but it does catch my eye with the other factors here for a day trade. Now, again, remember, Novo Nordisk to me was a swing trade. CrowdStrike, not even close to a day swing trade yet. So I'm only looking at CrowdStrike as a day trade, potentially an opportunity, and that's right around the 370 level here on the chart. So I'll keep it on my radar, and we'll go from there. But again, right now, it's still about $16 away. But on a $380 stock, that's not a big fall. Another one I'm watching here actually for a swing trade is this chart on Roblox. Okay, so Roblox is on my radar here. They actually had good earnings about a week and a half ago. You can see here it popped up, had a nice rally on earnings, but it's come all the way back in. It's even making a small bear flag here, which could signal a push lower. If it pushes lower, I'm loving this pivot area right here as an accumulation zone. It is quite a bit lower at $50, but this would be a very good level to start a swing trade position with additional levels right here. You have this pivot top area at 46.75 and an additional gap fill at 43. So basically 50 down to 43, huge accumulation zone for a bigger bounce, in my opinion. All right. Lastly, let's jump into Bitcoin. Now, Bitcoin here, folks. Again, this is an interesting chart on Bitcoin, as again, it's continuing to chop around in this vicinity. The key is, and I gave you guys this level, I said, listen, Bitcoin right now has major support around 66,000. As long as that holds, and it's so funny because people were like, oh, it's breaking last night, right? I mean, that was the predominant feeling, sense. I even did a video over the weekend on crypto on my YouTube. And I discussed again this pattern, but last night people were so bearish. They were like, oh, it's breaking down. What happens today? And this is why you always want to give it time to breathe as a chart, is because when you look at it, what's happened? Look at this, okay? We've bounced all the way back in this zone, and we're still inside of this bullish consolidation zone. Now, we have to see where it closes today, but ultimately, as of now, the bullish pattern is still intact, and I continue to be a near-term bull. I might be still a midterm bear, but this pattern is a pattern. And again, probability, right? It's probability. So what am I expecting? Eventually, if it holds this pattern, you get a breakout and move back to about 80,000 on Bitcoin, maybe as high as 85,000. And that, again, would be the upper range this would be the upper range kind of the upside that I would expect. So I still like Bitcoin here. It's still holding the pattern. Now, if the pattern fails, then that's a different story, but that's part of technical analysis. It's understanding that when this pattern is intact, then it favors this. If that pattern fails, then the probabilities start to redo themselves, and it could tell you it's going to go down. Right now, probabilities holding true. We're going to see where it goes in the near term. All right, gold today, it is potentially breaking above near-term resistance, this $5,100 level on gold. If it does hold and confirm tomorrow above this level, you should see upside to 5,400. That would be this area, the kind of the high of the bodies on that move up. If it breaks this 5,400, then it goes to 5,600, the all-time high. All right, so watch this closely. This is going to be a big determining factor. There's no doubt that the uncertainty that this new tariff, a blanket level, has brought in is a positive. It's making more people run into the safe haven of gold in the near term. We'll see if that holds up. Now, if we flip to silver, silver is still stuck in its range. Good move on silver the last few days. But if you've been following along, we knew that this is likely going to happen, right? I mean, how many times did I draw in this and I just kept on going like this in the charts, right? You're in a range-bound trade on silver. Resistance 92 to 91, support 71 to 70. So again, if we hold below here or into this level, it still is a sideways chop. Just like if we hold this, it's just going up and down and up and down. Now, the bigger pattern is the concern for me, right? So the bigger pattern, if we understand our pattern formations, we have a down move and we go like this. What type of pattern is that forming? It's forming a bearish pattern, which generally yields a move to the downside. So while near term, we could still go up and test 90 to 91, the midterm, which is about, I would say, weeks to a month or two out, that still favors, as long as we don't break above 92 to 91, it still favors downside action in the charts to as low as 50 to 54. Oil continues to stay relatively strong here. I did exit my oil trade last week right up in this upper range. It could still go higher, especially with the Iranian potential for military action with the U.S. But at this point, the upside, especially with the economic data starting to weaken, it made me say, you know what? I don't want to get too greedy on this trade, and I did exit. Would I short oil here? Heck no. No way. No way, not with the potential for military action with Iran. But in terms of resistance, your next level would be right around $70 on spot crude. All right, and then if we go to natural gas here real quick, and we take a look at that, as we jump down to the chart I like to look at, nat gas was up sharply this morning. It's coming back in. There's really nothing new here. It's just a whole lot of chop. There's no tradable levels that I like, at least probability-wise, that give me a good enough probability, number one, and then risk reward. Remember, there's two factors that you look at, and I'll end with this, that you look at in every trade. So the first one is probability. So if the probability is not in your favor significantly, I don't care what the risk reward is, I'm probably not taking it. Now, if probability starts getting towards 70% or higher based on the factors in the chart, then I start to say, okay, well, what's the risk reward? And if the risk is 1 versus reward of 2, at 70%, I'm probably taking that. If risk reward, let's say if probability is 80 to 85%, I might be okay with a 1-to-1 risk reward ratio. And these are the things that you start to develop as a trader to understand. Again, risk reward can adjust based on probability. They're two moving kind of factors in alignment. All right, guys, I've got to get to my trading room this morning for day trading. I hope to see some of you guys there. Remember, we have daily passes. So if you just have a day off from work and you just want to come in and trade with us, there's so much education because all the traders are all talking about the setups, what levels, the thought process, etc. But you can find us again, verifiedinvesting.com, the Apex Live Day Trading Room. Check it out. If you like it, you can stay for longer, obviously. And then as always, we have our swing trade services, Smart Money Stocks and ETFs, for stocks and ETFs, where you can see my live portfolio for 2026. We've hooked it up where it literally shows you the whole portfolio, the P&L. It's pretty darn cool. Full transparency. My losers are there. My winners are there. You see the P&Ls. I'm up or down on them. It's pretty darn cool. Check us out at verifiedinvesting.com and go have yourself a great trading day. Have a good one, guys. Talk to you soon. Take care.